Today, we're diving into a really interesting player in the Turkish market. We're looking at the 9-month 2025 financials for Borusan Yatırım ve Pazarlama AG. You probably know them as Briat. Our mission, as always, is to cut through the noise and give you, the individual investor, the clear insights you can actually use.
Yeah, and with Briat, you really have to adjust your thinking from the start. It's not your typical operating company. It doesn't make or sell things directly.
Right.
It's fundamentally a strategic investment holding company, a really key part of a larger Borusan group.
So its job is basically to manage its portfolio.
Exactly. Manage and support its subsidiaries. These are in industry, commerce, services, and the goal is to generate value, mostly through dividends, back to its own shareholders.
Okay, so the real action is kind of hidden one level down in those subsidiaries. We're going to peel back those layers today. We'll look at the management, which is surprisingly lean, actually. We'll examine the P&L movements. And crucially, we have to talk about this major strategic sale mentioned in the footnotes. It's a big one.
Definitely game-changing potential there.
It really is. So, look, this is one you'll want to keep handy. Please take a second now, hit that like button, subscribe if you haven't, maybe share it. It really helps us out. Okay, let's unpack this. All right, so let's start with the basics. Who exactly is Briat?
Well, they've been around a while. Established back in 1977, headquartered in Istanbul. They listed on the Borsa Istanbul, the Beast, back in 96.
And their core business model, as you said, isn't production.
No, not at all.
Yeah.
Their entire value, their financial performance, it all comes from their portfolio companies, their affiliates, or isterakler. That really dictates everything, how they make money, what their risks look like.
And who controls Briat? Is it widely held?
Actually, no. It's highly concentrated. The parent, Borusan Holding SA, holds a dominant 64.13% stake.
So the part traded on the stock exchange, the public float, is only about 11.31%.
That's right. And reinforcing that control, there's a large block, 562.5 million, of what they call a group registered privileged shares.
Yeah.
That really cements the holding's influence.
Interesting. So if we were to do a quick sort of mental SWOT analysis right now.
Sure. The big strength is obvious.
Yeah.
Diversification. They've got significant stakes in really core Turkish sectors. We're talking steel, automotive distribution, heavy machinery, logistics.
Like Borusan Makina distributing Caterpillar.
Right.
And the BMW M-I&I dealership network.
Exactly. Critical sectors. But the flip side, the weakness is just as clear. Briat itself doesn't generate operational income. If those subsidiaries stumble, well, Briat doesn't have its own engine to fall back on.
It's entirely dependent then.
Entirely reliant on the performance and the dividends coming up from those underlying businesses.
Yeah.
Okay, so we know who they are, what they own. Let's look at who's actually running the show. The governance structure is, well, it's incredibly lean.
Incredibly lean is right. The management board itself only has 5 members. But what really jumped out at me, and it underlines that holding company efficiency, is the actual employee count.
Oh, yes.
For the whole 9-month period, the average number of personnel was just 8. 8 people, all white collar.
Think about that. 8 people overseeing a portfolio worth billions. That's the holding company model in action. Minimal overhead within the holding structure itself.
Of course, managing that kind of complexity needs top talent, even if the headcount is small.
Absolutely. And they do compensate for that expertise. The total pay for the board and the senior execs for these 9 months came in at 6,865,468 Turkish lira.
So around 6.8 million TL, about 6 million in salary and benefits, and the rest, maybe 800K in vehicle costs and other bits.
Yeah, that's the breakdown. It reflects the need for high-level strategic management, even with that tiny core team.
And what about governance points, like gender diversity on the board?
Good point. Right now, there's 1 woman on the 5-member board, Tayin Shadam. So that's 20% representation.
Okay.
They do have a stated corporate governance goal, though.
Okay.
Following Principle 4.3.9, they're targeting 25% female representation on the board by 2030.
So progress, but still working towards that target.
Exactly.
Okay, here's where it gets really interesting, I think. Let's talk about the portfolio itself. This is Briat's engine room, right? Where the value actually comes from.
Absolutely. Understanding the key affiliates, the Uterikler, is crucial. We can kind of group them into, say, 3 main pillars.
Okay.
First, you've got automotive and machinery. This includes Borusan Makina, that's the big Caterpillar distributor you mentioned, operating not just in Turkey, but also the Caucasus, Central Asia. Briat holds 29.25% there.
And Borusan Automotive.
Right. Borusan Automotive, the BMW, Minai, and Motorrad distributor in Turkey. Highly profitable business. Briat has a 26.00% stake. And there's also Borusan Auto, the retail and service side, where they hold 20%.
So a strong presence in high-value automotive and machinery. What's the second pillar?
Heavy industry. This provides a lot of stability. Think Borslik, a leader in galvanized steel Braia, holds 15.30%, and Borusan Boru, a major player in the steel pipe market, with a 9.08% stake.
Industrial backbone stuff.
Precisely. And the third pillar, which is really important context for later, is logistics. This involved their stake in Borusan Logistic and also the more specialized Borusan Teterix Siri, the supply chain solutions company. They held 30.53% in both.
Okay, Teterix and Siri. I'm making a mental note of that one.
You should. It gets very relevant soon. But yeah, this wide diversification across these pillars is what gives Bright its operational resilience, which we definitely see playing out in the financials.
All right, let's transition then. Let's get into the core financial analysis. We're comparing the first 9 months of 2025 with the same period in 2024. And as we've established, Bryant isn't selling widgets, so its main income lines are dividends and its share of profits from these investments.
Exactly. So starting right at the top, with revenue, or hasalat, as it's called in the report, we saw a slight increase, actually. It went up to 89.68 million TL in 9M 2025 from about 79.45 million in 9M 2024.
And that's pretty much all dividend income.
Almost entirely. 89.68 million TL in dividends this period, mostly coming from strong performers like Borslik and also Subsan. So, the dividend tap from the subsidiaries is definitely flowing.
Okay, dividend income is up slightly, but here's where the story gets a bit more complex, right?
Yeah.
The core operating loss. Isas Filiet Zarada.
Ah, yes, that widened quite significantly.
It looks like it went from a loss of about 27.4 million TL in 2024 to a loss of 58.4 million TL in 2025. That's a big jump.
It is, and you can trace that directly. The main driver was an increase in general administrative costs. They leaped from 102.4 million TL up to 141.8 million TL.
Wow, even with only 8 employees, what's driving that?
Well, even with a small team, managing a global portfolio of this scale involved significant costs. The specialized consulting, legal fees, governance overhead, perhaps higher executive compensation contributing too. It all adds up at the holding level.
Right, but here's the fascinating part about the holding structure, isn't it? While Bryat's own operational costs are going up?
It almost doesn't matter for the bottom line.
Exactly, because the profits flowing up from the subsidiaries act like a huge shield. That line item, share of profits from investments accounted for using the equity method, is kainak yentemile derlan, yakrim lurin, karlan, and palar that basically neutralized the operating loss.
Perfectly neutralized it. It remained incredibly stable. It was 1,155.0 million TL in 9M 2025 compared to 1,154.4 million TL in 9M 2024. Almost identical.
So despite that widening operating loss at the holding level, the overall net period profit, the Donam Kara, was essentially flat.
Flat as a pancake. 1,174.6 million TL in 2025 versus 1,174.4 million TL in 2024.
Which means the earnings per share, the EPS, or pay Bashuna Kazans, is also virtually unchanged. It's 0.417647 TL versus 0.417588 TL.
Yeah, it's a perfect illustration of how a well-structured holding company with strong underlying assets can deliver incredibly stable net results, even with the volatility in its own administrative costs. The subsidiaries are carrying the load. Now, if we shift focus from the P&L to the balance sheet, the financial health picture is, well, it's quite stunning, actually. Discipline.
What's the headline takeaway there? For me, it's the debt, or rather, the lack of it.
Absolutely fundamental. Bryant has zero financial debt. We're talking no bank loans, no bonds, nothing like that. They are entirely financed by equity.
Which is just a massive position of strength, isn't it?
Huge strength. And it's compounded by their liquidity position.
Right.
Look at the current ratio.
It's incredibly high, 76.52 as of September 2025.
Now, it did come down, admittedly. It was even higher, 100.47 at the end of 2024. So that's a drop of about 24 points.
That's quite a noticeable drop. Is that a concern? Or is it just reflecting something else?
Well, 76 is still exceptionally high. It means they have 76 lira in current assets for every 1 lira in current liabilities. The drop is likely related more to working capital movements or perhaps significant dividend payments reducing cash, rather than any underlying liquidity crunch. It's still very, very liquid.
Okay. And speaking of the balance sheet strength, what about total equity? Uzkainak.
Equity saw a very healthy increase. It grew by about 3.6 billion TL during the first 9 months of 2025, went from 26.0 billion TL at the start of the year to 29.6 billion TL by September 30th.
That's a solid increase. But it wasn't mostly from retained earnings, was it? Where did that equity boost mainly come from?
A good question. The biggest single driver wasn't profit, actually. It was foreign currency translation differences. Yabancı para çevrim folklore.
Ah, the FX impact.
Exactly. Because Bryant uses the U.S. dollar as its functional currency for accounting, the significant depreciation of the Turkish lira against the dollar during that period automatically inflated the TL value of their foreign currency assets and investments when translated onto the balance sheet. That accounted for a huge chunk of the equity increase, something like 5.18 billion TL on its own from comprehensive income, largely driven by these translation effects.
So it's partly an accounting effect, but it does reflect the real underlying value change in TL terms, makes the FX exposure very tangible.
Very tangible, both the risk and, in this case, the balance sheet benefit.
And thinking about returns to shareholders, Bryant has a reputation, right?
Oh, absolutely. A history of very strong dividend payouts.
Yeah.
Just look at the previous full year, 2024. The gross dividend payout ratio was, well, it was astronomical, over 5,800%.
5,800%.
Yes. It shows a clear management commitment to returning capital.
That's likely why, as you see in the cash flow, their period-end cash reserves actually dipped slightly compared to the start of the year, from 373.7 MTL down to 248.7 MTL. They generate good cash flow from operations, but they also pay out substantial dividends.
Okay, strong dividends. How did the stock itself perform during this period?
Decent, but not spectacular compared to the overall market. The share price grew 10.95% over the 9 months, closing at 2,262 TL.
Okay.
But the main index, the BIS 100, was up 12.00% in the same time frame. So Bright slightly underperformed the index during these specific 9 months. Still, market cap was substantial, around 60.7 billion TL at the end of September.
All right, we've hinted at it, but we've saved maybe the most critical piece of information for near the end. It's tucked away in the footnotes, but it has massive implications for the future.
Yes, this is the big one. The key liquidity event we mentioned earlier. We're talking about the sale of their entire 30.53% stake in Borusan and Sherry.
The supply chain solutions company that was spun off from Borusan Logistic.
That's the one. It was sold as part of a deal where 100% of the company was acquired by CV Corporate Services, which is part of the CMA CGM group.
And the numbers are significant. The total enterprise value was pegged at $440 million initially.
Right, and the deal actually closed just after this reporting period ended, finalized on November 5th, 2025. After final adjustments, the total cash received for the 100% sale was $383.2 million.
So Bryant received its proportional share, 30.53% of that $383.2 million, in cash in U.S. dollars right after September 30th.
Exactly. This completely changes their cash position going forward. They were already debt-free and liquid, but now they have a very substantial war chest of hard currency.
It transforms them from just a stable holding company into potentially a major capital allocator, doesn't it?
Absolutely. Zero debt plus a huge cash injection. That gives them immense financial firepower for whatever they decide to do next, acquisitions, investments, or something else.
We'll get to that something else in a moment, but quickly, before we wrap up, you mentioned the FX risk earlier because of the USD functional currency. How do they manage that exposure?
Yeah, it's a constant factor. The reports detail their approach. They state a 20% change in the TL-USD rate would impact profit or loss by about 11.0 million TL, which is actually quite contained relative to their overall size.
How do they keep it contained?
They use a sophisticated risk management framework. This includes value at risk, VAR modeling, to quantify the potential impact, and they actively use derivative instruments, things like currency options and forward contracts, to hedge against unfavorable exchange rate movements.
So active management of that FX risk.
Yes, it's a core part of their financial management. So let's bring it all together. What does this really mean for you, the individual investor looking at Bryant?
Well, the key takeaways seem pretty clear, right? First, this company is financially rock solid. We're talking almost 30 billion Turkish lira in equity on the balance sheet.
Rock solid, and crucially, as we stressed, zero financial debt. That's a huge de-risking factor.
Second, their profit generation, while indirect, is incredibly reliable. It's driven by that diversified portfolio of strong underlying subsidiaries that shields them completely from their own, let's call them administrative inefficiencies or rising costs at the holding level.
The subsidiary engine just keeps humming along, feeding profits upwards.
But the narrative really shifts now, doesn't it? Post-September 30th, the big story isn't just the stable profits, it's about capital allocation.
Exactly. That's the core question now. They've just received this massive cash inflow in dollars from the Borusan to Zinsiri sale. Hundreds of millions of dollars equivalent hitting their account.
So the big question for shareholders and for anyone watching the stock is, what will management do with this huge pile of cash?
Will they go hunting for new strategic investments? Maybe look at emerging technologies or different sectors to add to the portfolio. That's one possibility. Or will they stick to their historical playbook and return a significant chunk of it, maybe even most of it, directly to shareholders? An extraordinary capital return, likely via dividends.
And that really is the billion lira or maybe multi-hundred-million-dollar question for 2026, isn't it? Given Bryant's track record, that almost unbelievable history of prioritizing shareholders with those massive dividend payouts,
You have to wonder.
will they use these huge proceeds from the Todaric sale to make 2026 another absolutely record-breaking year for dividend payments? It feels like a distinct possibility.
It's definitely the key thing investors will be watching. How that cash gets deployed will determine the next chapter for Bryant's shareholder value story.
Well, that's certainly something for everyone to mull over.
Thank you for joining us on this deep dive into Bryant.
Yes, thank you. And if you found this analysis helpful, please do support the channel, like this deep dive, subscribe so you don't miss the next one, and share it with anyone else who might find it useful. We'll see you next time.